for the first panel. Along with us today, Mr. Sanjeev Kaushik. Sanjeev is an IAS, Kerala cadre 1992. He has an MBA from London Business School and mechanical engineer from BITS Pilani. Sanjeev is currently the Additional Secretary, Financial Services, Ministry of Finance, New Delhi. Prior to this, he was Principal Secretary, Finance of Kerala. In 2018, Sanjeev was appointed whole-time member of SEBI. Before that, he was CMD of India Infrastructure Finance Company, New Delhi. And after that, he had a stint as Director of Capital Market in the Department of Economic Affairs from 2011 to 2015. Sanjeev had a rich stint of 12 years in a global investment banking as Managing Director of Equities at HSBC, as well as MD at Lehman Brothers in Mumbai. He has been the Chairman of Stockholding Corporation of India, Chairman of Infrastructure Company of India, UK, Governor of the Board of MDI, along with his current portfolio includes directorship of many institutions, including NABARD. In Kerala, he was earlier served in various roles such as Secretary for Ports and CEO for Abhiman International Port, where he was responsible for setting up an international seaport. He was the District Collector of Palakkad and also founding director who established National Business School, IIM Kozhikode. So he has also linked with IIM setup. So welcome, Sanjeev, for this special discussion. He has been, I think, in true sense, he's little away from the standard, IAS bureaucrats. I do not see him in that podium. He has been more from, banking and other fraternity, and look forward to his insights today in the panel. And let me introduce my next panelist, Mr. Anil Kumar Sharma. Mr. Sharma is now the Executive Director at RBI. He is a career central banker, and before taking as the Executive Director at the RBI, he was heading the enforcement department of RBI as a Chief General Manager. He has a master's degree in economics from Doaba College, Jalandhar, Punjab. He is also the UGC Fellow at Gokhale Institute of Politics and Economics, Pune, and he holds a diploma in Treasury and Risk Management and also a Certified Associates of Indian Institute of Banker. He had experience in the areas of supervision, management of currency. He was also a faculty of Reserve Bank College at Agricultural Banking at Pune. So he was a teacher for quite some time. Currently, he is holding the charge of Financial Inclusion Initiative at the Reserve Bank of India. And my third panelist in this is Shivnath Thukral. Shivnath is a very well-known face. Many of you have seen him in his days at NDTV for many years. Currently, he is the Public Policy Director, WhatsApp. He was the Managing Director of Carnegie India. He was the Public Policy Director at Facebook. He was also the Group President at Corporate Branding and Strategic Initiative at SR Group. Before that, he had many years with NDTV as business editor, particularly in NDTV Profit. You have seen him, many years. Shivnath has a master's from Southern Illinois University, Carbondale on telecommunications. Before that, Shivnath had a master's from Delhi School of Economics. Also, he holds a bachelor degree in economics from Delhi University. So you could see the range of expertise these three special panelists bring on the table. Let me begin with Mr. Sanjeev Kaushik. Maybe I'll just try to give you 3 or 4 pointers, and Sanjeev, if you can highlight your experience or the ideas around them, that would be useful. In total, we are expecting around 40 minutes to finish. So if you can keep your, remarks within 10 to 12 minutes, that would be really nice. Okay, the first would be if you can highlight the idea of the whole vision since 2014, what is driving the entire financial inclusion initiative from the government side. Number one, And number two, I would like also you to experience how did you deal with the pandemic times? What was the thought process behind it? How did you reach out? What was the digital platform you used? And how did you reach to the last mile of access? And third, your special focus, I would also try to get some idea about, on the issue of promoting entrepreneurship, self-help group, and particularly schemes for women. And the fourth, if you could also share your idea going beyond the standard of standard of supply of financial inclusion. How do you reach, how do you effectively take financial inclusion to the financial empowerment? Thank you. Over to you, Sanjeev.
Thank you, Professor Das. And I must say, it's indeed a pleasure to be at the most prestigious institution in our country. I would have always loved to be at IIM Ahmedabad myself, but unfortunately the IIS happened before I could get into the IIM system. And then I was given the opportunity to set up IIM Calicut, so partially compensated for the fact that I'm not an IIM alumni, but most of my close friends are from IIM Ahmedabad, Calcutta, etc. So a real pleasure to meet you. I would have loved to be there in person, but maybe some other time. To come straight on to the questions that you've posed, and I'm conscious of the fact that the other panelists are also extremely experts in this area of financial inclusion, and very esteemed set of panelists you have here. But I wanted to outline from the government perspective the entire vision and the strategy that we have followed in the last several years to achieving our goals in financial inclusion. In 2014, our Honorable Prime Minister launched the Jan Dhan Yojana. And that really was the foundation, that was the building block for all that followed on top of the platform that the Prime Minister's Jan Dhan Yojana has achieved. Today, we are at about 44 crore Jan Dhan accounts, which are the basic no-frills accounts for people all across the country, whether they may be in rural, remote areas or otherwise. But this is intended to provide access to basic financial services to each and every individual, each and every unbanked adult in our country. If you see the kind of strides we have made as far as coverage and provision of financial services is concerned, the World Bank Findex report comes out with periodical assessments. In 2013, about 35% of unbanked adults in our country had access to financial services. The 2018 edition of the World Bank Findex report put that number above 70%. And I think if you, the latest numbers are not available with me, but I think we have more or less come to 80%, 85% range, which can be taken as saturation. So we are in, if you see 65 crore BSBD, basic accounts in the country, we are already at 44 crores as far as the Jan Dhan accounts are concerned. And really this provides the access to financial services, to the banking system, to unbanked adults across the country. Now, building on top of this, in 2015, our government launched the Digital India campaign. And here is where the whole push happened behind the JAM Trinity. Some of you would have heard of Jan Dhan, Aadhaar, Mobile, the Trinity. So the Aadhaar numbers were seeded in the Jan Dhan accounts, and now using the fast proliferating mobile platform, each and every account holder could access digital payments. For example, he could access his account and make the basic transactions on the palm of his hand. So this JAM Trinity proved to be very powerful. In all these years, a big push was given through the UPI platform. And today the numbers are in front of you. In October, I think we exceeded about 6 lakh crore worth of UPI transactions. And that is a humongous achievement. Today, India is at the forefront as far as the global scenario is concerned. Not only in terms of promoting digital transactions, but in terms of being a champion of financial inclusion. Today, financial inclusion has engulfed, if you see the breakup between urban and rural, there more than 60% accounts are in the rural areas, more than 55% of Jandhan holders are women. So that's the sort of spread and reach of the financial inclusion platforms. Now, in following this whole success of the digital platform, we then provided a big push to schemes focused on livelihood generation, on self-employment, on entrepreneurship, which addresses the second part of your, the third part of your question, where we launched the Mudra program. Under the Mudra program, loans of up to 10 lakh rupees are given to micro, small, medium enterprises without the need for any kind of collateral security. So this is divided into three categories: Shishu, Tarun and Kishore Mudra Yojana loans. There is no need for collateral as the guarantee is provided by the government's CGFMU credit guarantee scheme run through the CGTMSE. And this was also followed by the Stand Up India program. Now, most of you would have heard of the Stand Up India program called the SUPI, but this is targeted mainly at women as well as the SC/ST beneficiaries who would like to take loans above 10 lakh rupees and up to rupees 1 crore. There is no guarantee, there is no collateral requirement in these loans also, because the guarantee is again provided by the CGTMSE, and therefore this is a guarantee-free scheme which is designed to promote entrepreneurship in the MSME and particularly in the women and SC/ST borrowers. So this is how the journey of financial inclusion has come across the years, starting from Jandhan Yojana on to the JAM Trinity, then the Mudra and SUPI programs. And today we are being able to reach out to a large quantity of beneficiaries across the country. Let me give you an example of how this came in very handy, very useful during the COVID. Last year, when the pandemic struck us, as you know, there was a severe lockdown across the country. And the imperative that we were faced in the finance ministry was how to reach immediate relief and succor to the households across the country, particularly in remote and rural areas. And the Prime Minister announced Garib Kalyan Yojana, in which the DFS, that is my department, had to reach immediately 500 rupees per month of relief to the women in households. Now, using the platform that we had built across all these years since 2014, we were able to directly transfer 500 rupees per month for 3 months. This is not a small, it may seem like a small amount of money, but think of the poor rural households which needed emergency access to cash for meeting their day-to-day needs when their income was hit. And we were able to transfer through the DBT mechanism into their accounts directly a sum of more than 31,000 crores to 20.5 crore women. Those are not small numbers. I think no other country has attempted a program of this kind of magnitude ever before. So this was, of course, then there were other programs that we launched during the pandemic. To, for example, 20% extra working capital was provided to MSMEs. This was the partial credit guarantee scheme through which we were able to provide, money so that businesses which were shut or where business was affected had the wherewithal to pay the salaries and take care of their emergency requirements during the lockdown period. So this is how we've been focusing on giving relief to the people in this pandemic period. This is how the journey for promoting entrepreneurship has come across the country. Recently, we have launched various campaigns under the Atmanirbhar Bharat package schemes. I wanted to particularly highlight the program for street vendors, that is the Prime Minister's Swanidhi program, in which we are giving small ticket loans to street vendors across the country. This is being done on a completely digital platform from submission of application on to sanction, and the street vendors are digitally onboarded. They are being given QR codes, which they then use for transactions, which some of you might have experienced in your day-to-day interactions with street vendors. But the Swanidhi scheme, where we have touched about 30 lakh sanctions across the country, has been a huge success. We have also launched a massive Kisan credit card. KCC campaign across the country, in which more than 2.7 crore KCCs were distributed between March 2020 last year throughout the pandemic period to now. Today, we are running an intense campaign to saturate those farmers who are not covered under KCC for animal husbandry and fisheries. Now, a lot of you may not totally relate to the importance of these schemes, but let me tell you that for the farmers in the field, particularly the small and marginal farmers, access to working capital is extremely important when it comes to the sowing season, when it comes to the harvesting season. And we were able to transfer not only the DBTs amounts that we, the 2,000 rupees that are sent under the Prime Minister's Kisan program, we were also able to, through the KCC intensive drive, give them access to working capital throughout this period and enroll more and more farmers. So this is a huge success, and this is an example of how, using the platform that we have built from 2014 onwards in financial inclusion, we've been able to bring people under the coverage of financial services, and this is how some of the government benefits and the government programs and schemes are reaching the far-flung corners of our country. Finally, I wanted to address the last point that Professor Das raised. Now, in our journey so far in 7 years, we have come a long way as far as financial inclusion is concerned. That is Jan Dhan 1.0. Now we need to think about how do we move to the next stage, which is Jan Dhan 2.0. That is moving from financial inclusion to financial empowerment. How do we now empower these beneficiaries, these account holders, to make financial savings? In our country, we talk a lot about financialization of savings by providing people different instruments and different types of access to park their money for future needs, whether it is the requirement for a daughter's wedding or for building a house or for pension in old age. So recently, we've launched a pilot in Varanasi district, which is called Project Kashi, 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 which is cash over internet. Don't worry about the spellings. This is our way of popularizing these schemes. But under Project Kashi, we want to now give cash directly online by assessing the capacity of borrowers, not simply based on appraisal of collateral security or what they mortgage. We now want to see what is the cash inflow and outflow, what is the income, what is the repayment capacity. And so far, banks in India have just given loans, and some of us call it lazy banking. It's not a fair criticism, but this is not based only on what collateral a person is able to provide. Now we are trying to target giving loans for people's requirements based on the cash income and the expenditures. And that is an important step in moving towards financial empowerment. We are also trying to link the various schemes online through a national common portal, which Government of India is in the process of launching, and to connect different schemes together. For example, if you wanted to enroll in the Sukanya Samriddhi scheme and you were a beneficiary under Jan Dhan Yojana, or you were receiving direct benefits or a subsidy under various programs, some amount of that money of your savings could go into the, let's say, the Sukanya Samriddhi account. Or if you wanted to set up your recurring deposit, then the linkage is provided online and you could have savings as a recurring deposit into some of for your future requirements. So this is the next step in which we integrate different products and different offerings together on an online platform and then provide economic prosperity to millions of our citizens who badly need it. I know I've exceeded my time limit. Let me stop there and I will take questions at the appropriate time. Thank you very much, Professor Das.
Thank you. Sanjeev is known as the right man at the right time at the right place. So particularly his point on Jan Dhan 2.0, our fintech entrepreneur can take a note of this, what he said. It's very, very important, at least going forward 5 to 10 years down the line. Okay, so now let me move to Mr. Anil Kumar Sharma. Mr. Sharma, if you can highlight some of the things which are happening in the RBI Let me give you a little background to it. Post global financial crisis, Reserve Bank of India actually introduced or took financial inclusion on almost on war footing basis. Okay, and that leads to ease of access, uh, use and affordability. These are two things I would like sir you to highlight in particular. And how did you go ahead with those two plans? And then, since you are representing or you are actually at the at the top of financial inclusion, it does not go without talking about directed lending. I think if you can also highlight those issues would be useful. And maybe if you because two nice, very nice policy documents are available in RBI websites: National Strategy for Financial Inclusion and National Strategy for Financial education. I know Reserve Bank of India has been more proactive on financial education. So if you can juxtapose this progress against the background of these two policy documents, that would be wonderful. Over to you, sir.
Thank you, Mr. Das, and good morning, good afternoon to all the panelists, and thank you very much for giving me this opportunity to share my views on around the 3 or 4 questions that you asked me to address. I'll start with the second one. How did we reach where we have reached? As you know, in 1947, when we got independence, the share of the non-institutional sources in the credit availability of credit was very, very high at 93.7%, which today stands at 28%. So this journey of 93.7 to 28 is the journey that we have covered. And that journey we have covered following a strategy which most of you would be aware of. It was the promotion of cooperatives in 50s and 60s. It was the nationalization of banks in 50s, 60s, and later on 70s. It was rapid branch expansion thereafter. It was the launch of lead bank scheme and annual credit plans, and also the priority sector lending, the direct lending, as you mentioned. And there were special interventions. Special interventions in terms of the SHGs, in terms of the KCCs, launch of the KCCs for the small and marginal farmers, in terms of addressing the last mile connectivity through banking correspondents, and overcoming the constraints of small and marginal farmers holdings through FPOs, which is recently being promoted. And we have also been undertaking a fair amount of outreach activities by our regional offices, media campaigns at the centralized level, as well as the financial literacy centers, which were opened by the banks in all the districts, and of course now the centers for financial literacy, which are being scaled up and opened throughout the country. I'll talk about some of these things later on. So this has been a broad strategy which we have followed, we have reached from 93.7 to 28%. But while this represents a fair amount of progress, this also represents what we call the last mile. And in our case, the last mile happens to be rather long. The issue, the second question which you asked me, in fact, the first question was the ease of access and affordability. How do we address? So when we look at the strategy which we adopted, which I just outlined, the underlying principles were ease of access, ensuring ease of access to the included, ensuring affordability, both in terms of time and money, ensuring that the documentation is simplified, especially for small loans, especially for small savers, reducing the overcoming and reducing the language barriers, and ensuring safety and protection of the customers and their money, and disseminating knowledge and information, which was very important. In fact, including a person who is excluded without adequate financial literacy and financial education can actually be detrimental to that person. So therefore, education and literacy is extremely important. It should go hand in hand, the financial inclusion. So how did we address how are we currently addressing the access and affordability? You mentioned about the NSFI. There are 6 pillars of NSFI. The first pillar of that is that let there be a banking outlet within 5 kilometers radius of each village or any household or hamlet with 500 houses in the hilly areas. So this has been achieved 100% in 24 states and 6 union territories. Overall achievement for the whole country is 99.9%. There is one banking outlet within 5 kilometers radius of each village. There are 107 villages which have been left uncovered, primarily on account of connectivity related issues, for which we are in discussion with the state governments and the BSNL as well. The second prong on which we have been addressing the issue of access and affordability has been expanding the digital payments, you can say, transactions, and the framework and the infrastructure. In 2019, we had asked the SLBCs of each state and union territory to identify one district in their state for 100% for enabling 100% transactions to be undertaken in digital mode. And the necessary infrastructure was to be created. So despite the related lockdowns, it got delayed slightly, but in the 42 identified districts by the SLBCs of states and the union territories, the saving banks to the extent of 97% and current accounts to the extent of 93% have been enabled for undertaking all transactions digitally. Writing on this experience, we have asked the SLBCs to scale it up and identify more districts so that a more number of districts in each state can be readied for undertaking all transactions in a digital mode. Similarly, promoting digital infrastructure by creating a fund for promoting digital infrastructure, especially in the smaller cities, and also leveraging the infrastructure which is already existing in terms of UPI, AEPS, the POS terminals, QR codes, etc. These are some of the strategies which are being adopted to make undertaking financial transactions affordable, and of course making them accessible to all and the greater number of people. Addressing the usage is one of the major issues that we have to address going forward. Simplified KYC, opening of the small accounts, what we call the BSBD accounts, mainstreaming the SHGs, opening their saving bank accounts, and linking them to the banks, etc., have been some of the things which we have done in the past. The second pillar of the NSFI, which you mentioned, focuses on this part, which says that the entire bouquet of financial services should be available to every new entrant which gets included in the formal financial institutions in terms of insurance, pension, investments, credit requirements, etc., and universalization of the pension and insurance coverage to all willing and all willing and all eligible persons also should be ensured. Similarly, addressing access and usage, one of the strategies which we have adopted for quite some time now, since 70s, has been the introduction of the lead bank scheme and the priority sector lending, which we also know as the directed lending. Lead bank scheme, you will be aware of, comprises of preparing of an annual credit plan for each district and following from the block level onwards and ensuring its monitoring and follow-up through BLBCs and DCCs, the district credit committees, and the SLBC, state level bankers committees. Priority sector lending or directed lending, as we call it, started again in early 70s. Agriculture, small-scale industries, and other priority sectors known as other priority sectors those days, primarily comprising of trade, education, and housing loans, etc., were the main components of directed lending. This continues till today. Recently, in fact, last year, September 2020, we revised priority sector lending guidelines substantially. And one of the major issues which we tried to address was the regional variation in the availability of credit. We found that there were certain districts, around 180 districts, where the per capita flow of credit was very low, less than 6,000 rupees per capita, vis-a-vis some other districts where the per capita flow of credit was comparatively better, more than 25,000 rupees per capita. So we have assigned a weight of 125% for lending in the backward districts, and 90% to the comparatively forward or advanced districts, and 0% weight in those districts which are neither forward nor advanced. The second thing which we did was we provided for higher targets for small and marginal farmers from 8% to 10% of the total bank lending, and the weaker section which we increased from 10% to the 12%. Women form one component of the weaker sections, so higher credit for the weaker sections eventually will translate to higher credit for women in general. Similarly, bank finance, a greater bank finance has been now provided for the startups, for the solar power, both in terms of the grid connected to agriculture pumps as well as solar power plants which are on the barren lands. Similarly, the health infrastructure is sought to be promoted by doubling the amount of credit which is eligible for classification of priority sector. And similarly, the amount which can be classified as priority sector lending for renewable energy also has been doubled under the new schemes, under the new priority sector guidelines. In addition to this, there have been a few other measures which we have taken. For example, to promote early repayment or timely repayment of the agricultural loans and to give some subsidy to the farmers, small and marginal farmers in particular. There is the interest subvention and prompt repayment incentive launched by the Government of India, which is being implemented through banks for loans up to 3 lakhs in agriculture and up to 2 lakhs for animal husbandry and fisheries. Similarly, there is a scheme for linking the interest rates which are charged by the banks on the loans to the external benchmark lending rate, which banks have to identify. The basic idea is that the loans interest rates should be reasonable, and as and when there is a reduction in the overall interest rate of interest in the economy, the benefit through the EBLR linkage should also pass on to the small borrowers, mostly farmers and MSME borrowers. Similarly, we also now allowed one uniform scale of finance to be fixed at the state level, which is primarily a benchmark for giving the crop loans to the farmers. This will ensure better monitoring of the scale of finance, also easier implementation, as well as better scale of finance to the backward districts in the states. Similarly, the limit for the collateral-free loans also has been increased from 1 lakhs to 1.6 lakhs in agriculture in particular. There are a number of other measures, but for the paucity of time, I'll not go into further details, but I'll touch upon the a few COVID-related measures which we have taken recently. One, of course, which is very well known, would be the moratorium on the payment of installments and the interest of working capital and term loans, which was there. Similarly, we have allowed the restructuring of the loans of the MSME loans up to 50 crores, which are not NPA, they are standard, and SMA or even and they are eligible for restructuring. Up to 50 crores loans can be restructured. And similarly, there is another scheme for which is known as credit guarantee scheme for subordinate debt, which is for giving loans to the promoters of those companies whose loans are eligible for restructuring. These loans can be used by promoters to contribute their share of the capital. Similarly, to ease the cash flow needs of the small households and small borrowers, the LTV, the loan to value ratio on the gold loans was increased temporarily from 75% to 90% during the COVID period. Similarly, fresh loans given by the banks to the MSME borrowers who had not been borrowing from the formal financial institutions earlier, up to rupees 25 lakhs, were allowed to be netted from the NDTL calculations, so that the banks, by giving fresh loans to such borrowers, could get some benefit of in the CRR calculation. Addressing the lack of knowledge and awareness is one of the important parameters which, going forward, we have to follow more diligently. As I said, financial inclusion and financial literacy of the financially included persons become very, very important. As I mentioned, outreaches of the regional offices of RBI are undertaken on a regular basis. We also observe at the national level a financial literacy week in February, during which we disseminate information and knowledge on a particular topic. For example, farmers, for example, MSMEs, and credit discipline, ensuring credit discipline was the last year's topic. Similarly, you must also have noticed on TV, print media, social media, the media campaign which is being launched centrally. In addition to that, the NCFE National Strategy for Financial Education, which is going to be the document following which we are going to address the lack of knowledge and awareness. The NSFE document, which is 2020-2025, primarily leverages what we call the 5 C's. That is, ensuring relevant content, developing the capacity of all the stakeholders, especially those who are imparting financial literacy and financial education, leveraging community by associating teachers and postmen and NGOs and ASHA workers, etc., with the education and literacy drive, adopting appropriate communication strategy, in terms of audio-visual and digital components, which are more to which people are more receptive to, and enhancing collaborations across all the stakeholders. Banks are there, regulators are there, government is there, NGOs are there. All have to collaborate together. And the way the financial literacy messages are to be slotted, they will be targeted on, let's say, life stages. For example, education, marriage, retirement, events, etc. Demographically focused in terms of focus on women and housewives, children, senior citizens, students, etc. Geography, for example, Central India, Eastern India, and Northeastern India, where financial inclusion is comparatively lagging, will be given a greater focus. And on economic parameters, for example, informal sector, greater focus on the informal sector, and greater focus on the rural sector, especially the small and marginal farmers. So this is the strategy of the NCFE going forward, and this is the strategy which will guide us going forward for the next 4 to 5 years. As I mentioned, the Centers for Financial Literacy was a pilot which we had started in 2017, and after 3 years of pilot, we are scaling it up to cover the entire country. This is also one of the NSFI pillars, and 2024 is the deadline for covering the entire country. During this year, we'll be opening 1,199 CFLs, and by 2024, we'll be able to cover the entire with the Center for Financial Literacy in the ratio of 1 CFL for 3 blocks. Similarly, we also have taken a number of steps of strengthening the BCs and the financial literacy counselors, which will address mostly the last mile issues which we face. Through training the BCs and ensuring certification of the BCs, and also creating a registry of the BCs for which anybody can log into the registry and see which are the BCs which are active in the area, in the particular area which person might be interested in. Similarly, we have published a FAME booklet, which is a small booklet primarily giving the basic financial literacy, financial education for trainers, for the financial literacy counselors, and also for the BCs. It can be useful, and for the common layperson also. It's written in very simple language. It has more than 20 messages spanning savings, investments, insurance, pensions, etc., and investments, which would be useful for the public at large. Similarly, you must be aware of there is a portal called Sachet, which is there for reporting any unauthorized acceptance of deposits to protect the interest of the small depositors, and also to lodge complaint in case any entity who has accepted deposits is not repaying in time. In addition, it has links to all the regulators' websites, and also links for lodging complaints if there is any grievance. So that portal is available for the common person. Similarly, we have also taken steps to ensure that the basic financial education content, which has been developed by the NCFE, a Section 8 company, non-profit company promoted by 4 regulators. The content developed by them is included in the state boards' curricula. 17 state boards have included the standard content in their curriculum, and with the remaining boards, we are in constant, follow-up and monitoring to ensure that they also include in their curriculum. So these are some of the steps which I have outlined, which we have taken with respect to increasing the greater education and literacy, and NSFI and NSFE pillars which need to be implemented. Going forward, just wrapping up, where do we go? In one sentence, if I was to say, going forward, we should ensure implementation of the 6 pillars of the NSFI and the 5C strategy, and the life stages and demographic and geographical focus of the NSFE, which I just briefly mentioned. But greater focus going forward will be on the usage and quality. I say it because a few months back we published a financial inclusion index. Some of you would be aware of that. While the overall index stood at 53.9 for the financial inclusion for the entire country, excess was at 73.3, which reflected all the measures which we had taken over since independence, as I outlined. And the usage was at 40.3, and the quality of the index was at 50.7. So going forward, while we have covered a fair amount of ground in terms of access, usage and quality is where we need to focus going forward. And that would be, and I understand that in addition to other measures which are outlined as part of NSFI and NSFE, the revised priority sector lending guidelines, which I outlined, the new definition of MSMEs, which Government of India has recently notified, and greater formalization, which is being driven through the registration of MSMEs on the Udyam registration portal. These will help in ensuring usage and ensuring quality. Quality, of course, would be through better and effective grievance redressal mechanism, for which we have recently launched a new integrated ombudsman scheme, which was launched by the Prime Minister on 12th of November. Addressing inequalities in the availability of the infrastructure is another task going forward, which we will have to address, and the greater financial literacy efforts by following the NCFE would be another strategy. So I'll stop here, and if there would be any follow-up questions, then I'll be happy to take. Thank you very much.
Thank you, Mr. Sharma. For giving a complete overview of the regulatory perspective around financial inclusion. One point, at the end, if time permits, I would like you to reflect on, financial inclusion. One of the key ways RBI has been pushing through financial education. Okay, but what we have found in our research, that financial education is not necessarily an essential prerequisite. What we found, it's a kind of weak necessary condition. I'll try to take your take on this point at the end if time permits. Let me move to Shivnath. It's a very special, I think, guest with us. Shivnath, if you can share your experience of the role of the platforms, what, like WhatsApp, what you are managing now, to the last mile digital ally, by being agnostic to the kind of service being provided to. That's number one. And number two, I would like you to also highlight, in the entire ecosystem of financial inclusion, how do you place yourself and how do you partner with the other, providers of financial services to anyone who wants to reach the final customer? Over to you, Shivnath.
Thanks, Professor Das, and thanks to the organizers for inviting me. And I feel fortunate to be sharing the same dais as Mr. Kaushik and Mr. Kumar. I have known Mr. Kaushik in person, so I completely am aligned with whatever has been said on this platform so far. I'll try and keep it short, and I know you're running over time, so I'll try and tell a few stories of how we are seeing things play on the ground. I come from the world of private sector, unlike my two other panelists, and I just wanted to acknowledge the way we are seeing the change on the ground right now is largely from what innovation is happening. And I can see the students at IIM Ahmedabad and the organizers would have had the audience who are also playing around with technology. And I think the one key takeaway is technology is at the core of whatever we are trying to do at this point in time, right? Whatever Mr. Kaushik said or whatever Mr. Anil Kumar said is left, for example, on the usage or the design. All of these things can be solved through technology and the innovation around technology. Some of the interviews I was seeing in the break of the innovators on the fintech side of it, that's exactly where we come in. And I think the story of WhatsApp hopefully is well known to people with the kind of user base we have of over 400 million in the country. We are getting some glimpse of what exactly is needed to solve for the challenges that the two panelists talked about. But first, I wanted to start by saying we are completely in alignment with the national strategy for financial inclusion. And I'll explain to you how. If you look at it from the way the role we are trying to play here, when we came in with our payment service, WhatsApp payment service, it took us a while to get there, and it's still kind of taking some time to move up, given the fact that NPCI, which is the chief regulatory body, is giving us permissions in caps. So we are now at about 40 million. Hopefully, our aim would be to provide the payment service to the entire user base. What it does is two things. And like Mr. Kaushik said, the holy trinity of JAM, we believe in the holy trinity of what is also mentioned in the NSFAI around affordability, access, and awareness. Because if you see the role that WhatsApp plays, the best part is that the service is free to all the 400 million users. So from an affordability point of view, we have already solved for the first point of challenge, which is how do people have something through which they don't need to worry about how do they pay for it. That's one part of it. The second is access. With a 400 million user base and hopefully increasing, access to a service, which is not just payments, and I will talk about it in a second, is already there. So you're already at the last mile. And here comes the complementarity or the synergy that we want to build in. And Mr. Kumar, I'm happy to come and meet you in person when travel restrictions permit, is to show that why our role is of a digital ally. Because we have in our head, at least to begin with, the access and the affordability challenges already partially solved. I would not say for the entire country, but because we are not there in the entire country. The moment you've solved for access and affordability, we become the digital ally. And how is what Mr. Kaushik said, or what we have done with partners like SBI and HDFC, and we continue to innovate with many fintech companies, is to become the platform or the digital rail for any financial services to be delivered through that. So today, by enabling WhatsApp payment, which is just one feature, but just by using WhatsApp, you can deliver any financial service to the last mile user. And what are the examples of that? Our experiment or our pilots with SBI for life insurance and HDFC for pension is already showing that if you innovate and partner with us, you can actually help a rural person buy an insurance in sachet form or a pension plan in sachet form within minutes. To Mr. Kumar's point, it solves for two issues. We can do KYC, one part of it. So we can solve for the fact that it is not like we have to make the whole education aspect the critical core. It can happen through the BCs. So the existing model that the government has created is phenomenal. In fact, companies like ours would not be able to deliver if the government had not solved for the basic infrastructure. Mr. Kaushik talked about the programs, the JAM. Mr. Kumar talked about the kind of financial infrastructure that is created in the rural areas. As Mr. Kaushik knows, I happen to live in a village right now, much away from Delhi. And I can tell you the digital infrastructure and the digital payment acceptance is phenomenally high. You can live without cash in a village today if you want to. And that's the kind of behavior change which is already happening because of the infrastructure laid out by the country. Just the other part of which I wanted to now talk about through anecdotal experiment that we have done. We have done many partnerships, critical partnerships. I talked about SBI, HDFC. For us, we are agnostic, as Professor Das said. We don't care because we are not going to be a financial services company ever. But what we will do is we will partner with any financial services company, including government programs. I have to pick Mr. Kaushik's brain when I get back to Delhi as to how we can partner with government to deliver some of the Mudra schemes or the Sonidhi schemes, which we know that the basic infrastructure is there, but how do we drive usage? How do we drive more adoption? We are doing it for the private sector. We would love to do it for the government sector. And at the end of the day, if we remain agnostic to the financial services, why just pension? You can deliver any banking product. So if the challenge is that the rural person does not want to go to a bank, but has a phone and a WhatsApp, are they able to get the financial services delivered in their hand using their phone device? And that's one part of it. But critical part is the three partnerships I mentioned. We have two very strong partners in rural and I would say gender inclusion lens. One is Mandeshi in the state of Maharashtra, where we work very closely with Chetna ji and in terms of training rural women, partnering with them to create a chatbot for them to get to learn more about how the business aspect of their products work. But more important is the innovation that they're already doing our platform. Using WhatsApp, and especially during COVID, we saw many women entrepreneurs innovate their existing businesses to create products for COVID-related challenges. So if there was a hosiery company, it innovated to start creating masks and then used the WhatsApp channel to do the marketing of it. So through our business app, which is also free to use, we have seen women be part of animal market. You are seeing a goat market on WhatsApp. I mean, I know it's funny, but having a goat market where goat can be traded using WhatsApp and putting up their pictures was a phenomenal discovery for us. So on Mandeshi side, we have seen a very strong drive towards rural financial inclusion, especially amongst the women community. The second partnership, which I wanted to mention very briefly, is Seva. You are all based out of Gujarat, so you would know what Seva does. But we have seen amazing success in onboarding, almost touching the lives of 50,000 women who are using WhatsApp and now being trained how to use WhatsApp Pay to make sure that they run their businesses effectively and efficiently. In fact, during COVID, we saw a great success story out of Kashmir where traders in Apples were able to continue to supply and access the market-related resources using WhatsApp. That's the second part of it. And the third anecdotal piece, which I wanted to share, as Mr. Anil Kumar said about the rural part of it, our partnership with the organization called OneBridge, based out of the southern part of the country, where we are now partnering to train digital payment adoption in 500 villages. Now, the interesting thing was, I was talking to them yesterday, the usage of WhatsApp already exists, digital infrastructure already exists. The awareness, which was the third part of the Trinity, which I didn't talk about, affordability, access, and awareness of, does it even exist on WhatsApp? How do I get onboarded? Once I do, how do I continue to drive usage through an incentive program at the village level entrepreneur, or not just the CSC BLE, but what OneBridge is training to be the village level shopkeeper. So if you see through these partnerships, again, we are partnering with anybody who can help us drive the last mile in terms of adoption and behavior change. One of the things I keep telling all the regulators across the country is payment cannot be an urban feature. Digital payment has to be a rural feature as much. And that is why we need product innovation. If today you're a part of the WhatsApp payment ecosystem, you will see that the rupee icon today, which is a kind of a visual icon to encourage people to start using it. Then on the camera, you can straight away start using your QR scan. So India market is teaching us how to innovate further. There was a meme at one time, right? The US companies don't innovate until there is some US issues. But today, companies like ours are looking at what is needed to innovate on the ground to drive greater adoption. The last piece where I will end is, what does the future look like? I think what Mr. Kaushik said, we have seen Jan Dhan 1.0. What will it take to drive Jan Dhan 2.0? We will be very, very happy and look forward to partner with anyone who can come up with ideas in the financial services sector where we can drive that. Pension, insurance, things like that are important for financial planning of people's lives. People don't do it enough. And I think if we can deliver it in a matter of minutes, solving for KYC, solving for all these issues, I think India's story is yet to unfold from a financial services point of view. One flag, I have always talked about it and we don't shy away from it. And I did see some questions come out there, is how do we make sure that the user remains safe? And I think we all bear a responsibility of how to ensure that frauds or some sort of financial crimes don't occur. And that's why we are strengthening our infrastructure and partnering with state agencies. We work closely with LE agencies to make sure we can also drive education programs and have safety partners to make sure such frauds don't occur on a mass scale. So long and short of it, Professor Das, I'll end by saying that our role as a digital ally, we are very proud to be present in this country. And once the floodgates are open in terms of we are allowed to roll out payment, because payment is the critical last leg, right? If you are allowed to give payment to all the 400 million users, I think the entire financial services sector, if they can figure out how to innovate to bring down their cost of delivery, we will be there to serve the last mile of the country and the last citizen of the country.
Thank you, Shivnath. Now it's open for questions from anybody who is online can ask, and from the floor. Okay, go ahead.
Hello, sir. Good afternoon. Mr. Sanjeev talked about the shiny numbers. We have this much of Jan Dhan account, KCC account, and next he forgot to mention that how much functional these accounts are. And because we have this, we know the share of non-formal financial credit, that is 30% still. How much they are functional or effective?
So no, that's a very good point. What you're talking about is the number of operative accounts, Jan Dhan accounts, and what is the kind of balance available. So I have the figures right here in front of me. In fact, more than 33 crores out of the 44 crore Jan Dhan accounts totally are operative, which have seen number of transactions. And in terms of the balance that is available, the free float that is available in these accounts, I think RBI may have the more latest figures. So Mr. Anil Sharma has requested to correct me, but if I remember correctly, it was upwards of 1,25,000 crores, which is available in the Jan Dhan accounts. Mr. Sharma, is that the right figure? If you have available?
I can't immediately recollect the figure, but the number of accounts there around 43 crores. That I broadly recollect. But the amount I need to check up.
Sure.
I'll check up. Maybe in a couple of minutes I can come back on this.
Sure. Thank you.
There is one question which is there, there in the chat box for how do we increase the ownership of insurance and retirement accounts? Correct. Misha Sharma has asked this question. So it primarily doesn't pertain to me directly, but I'll still attempt an answer. One of the reasons for the low penetration of insurance and retirement planning is number one, lack of low income is one. If a large number of population is have low incomes, but even when income is not a constraint and people do have surplus and disposable incomes, there is lack of awareness. The importance of insurance in terms of planning for the future and planning for various life events, which I mentioned about, which are mentioned which is one of the strategies of the NCFE, which is planning for the life events, for example, marriage, for example, retirement, for example, education of the children, etc. That awareness is lacking. So it is that lack of awareness which is sought to be addressed through the one of the strategies of the NCFE. So, and as I also mentioned that as part of the NSFI pillars, it is necessary that all the new entrants to the financial system, they should mandatorily be covered by the pension yojanas and insurance which are currently available. If they're eligible and if they're willing, they'll be compulsorily covered by that. So addressing the lack of awareness and compulsory covering of all the willing and eligible persons with the pension and insurance, that will help in a long way in increasing the incidence. I hope that answers at least to some part the question which was asked.
Anilji, if I can also add that, on the steps that government is taking to increase the penetration of insurance, particularly the Jan Suraksha schemes and Atal Pension Yojana, yes, the take-up remains quite low. Ideally, 100% of our Jan Dhan accounts should be enrolled in Jeevan Jyoti Bima Yojana and Jan Suraksha Bima Yojana and Atal Pension Yojana. If you see, we have also kept the premium very low. So Jeevan Jyoti Bima Yojana requires only 330 rupees per annum. And Jeevan Suraksha Bima Yojana requires only 12 rupees premium per year. So these are very low rates. We have recently also made some improvements. We've kept it a completely digital online claim to reimbursement process. We've reduced the turnaround time from 45 days to 15 days in the hope that this will have more take up. And Honorable Prime Minister on Independence Day announced a campaign for saturation. So we have launched a Jan Suraksha campaign across the country in all states, where we are trying to enroll the maximum number of Jan Dhan account holders and also the maximum number of beneficiaries under different schemes like Mudra, KCC. You may be receiving some other benefits from government. We want to saturate these beneficiaries on the enrollment under the two Jan Suraksha Bima Yojana schemes as well as Atal Pension Yojana. So all this is going on. One focused campaign has been going on since 2018 in the there are 117 aspirational districts across the country, where I am personally running a program for Niti Aayog to set precisely what you are asking about, to increase the enrollment under these programs. So I hope that partially answers what you are looking for.
Thank you. Actually, we are running out of time. So maybe
just one, Mr. Das, the information total amount outstanding as per the information which we have is 1.49 lakh crores. In the Jan Dhan accounts, and 55% of them pertain to women.
Okay. Thank you. Thank you. Just because of the time, I'm just closing now. But before I close, one point I thought I'll ask Shivnath to include us, the people like academician, and share your data for research, so that we are actually included in the 5 years down the line, what it should look like, we can also be part of that. Thank you very much.
Absolutely.
If you want to, react.
No, absolutely. In fact, if you see, I mean, the way we function, we already run several academic partnerships. So we'll be very happy to do that, Professor Das. And one of the reasons why we were talking to the organizers here is to understand the kind of work you're doing. Because as I said, I mean, we fundamentally believe that what we can do in this country is beyond just the urban centers. If we are able to solve, because of the access of the product, for the financial services sector by partnering with them, agnostic to any company, we will be able to deliver, as Sir said from RBI as well, that it is up to the financial services company how they want to do it. Mr. Kaushik said if the insurance premium size is only about 12 rupees per annum or per month, actually using the innovative technologies, we can bring it down. What happened to shampoo many years ago can today happen to insurance and pension schemes, and that, which is what will change the fundamental behavior towards financial planning when it comes to this country.
Thank you very much, all three very special panelists, for this. I think setting the tone for the subsequent sessions today. Thank you very much. There could be some questions. Possibly, I'll take you offline or by emails. I can send it to you.
Sure.
Thank you very much.